Good morning. This is Chris Robinson, Robinsack Marketing, with today's pre-opening grain and livestock comments for Tuesday, October 14th, 2025. Well, I don't know why everybody seems surprised that, yeah, there are more tariffs coming from China on U.S. shipping that had been announced a while ago. I guess they're surprised when it actually happens. I don't know. That's overnight, we're lower. China throwing some more um, tariffs on U.S. shipping. Um, Anything coming out of South Korea shipbuilding. They also added port fees and vessel taxes. Um, and lo and behold, not that it's related, it's a different problem completely, but you do have wheat making a 5-year low, which again, we talked about this earlier. Whenever the market makes multi months or multi year lows, it hits the news wires, and people who never ever trade at all, like, oh my, let's sell some wheat. So there's going to be some pressure here, I would imagine. I sent out recommendations yesterday for any of you who have November dated bean and corn options. Most of you have all of your wheat options moved to Dees with me, but those November options are expiring here in the next 10 days or so, 12 days. So we need to get you moved out till January or December. We need more time. If you're storing, don't do the storing anymore. Please, if you're paying all that money for storage, keep a floor under it. And no, I'm not promising you that we're going to go lower, but I want to defend against the possibility. There's a difference between me and 95% of the people out here that are in the advisory business. No, I don't waste time telling you, oh, I know exactly where the low is. I know exactly where the high is. I can give you a good hedge until you sell your grain, period. Overnight, December corn down a penny, 409 and a half. We take out 403. It's going to be an interesting rest of the week. The contract low you've got to be worried about is 392. The high of the year was 479 and three quarters. Wouldn't it be interesting if we went all the way down to 379 and three quarters? That's all I'm going to say. And when people say, what's their, if we take out 392, I'd say I wouldn't be surprised to see 79 and three quarters just so we get the whole dollar move. Again, I've been in the markets for over 30 years. Lots of times markets like that, 50-cent moves, $1 moves. We've seen that a couple times this year in the beans. We've had a $1.04 range. So it might not be a perfect dollar range, but it's close to it. That's a possibility. Again, possibility with a capital P. So yeah, there's still risk in corn if you're just going to store it and ignore it. March corn is at 426. If it takes out 425, I think it opens up the door to March corn. Um, Again, there's some downside risk there in corn. I hope you don't need a put, but it makes sense at this point to have a put on that's 4, 5, 6, 7, 8 cents, something like that. You don't want to have a 20-cent put on right now. In the beans, here we go. We're down 10.02 last night. If we take out $10, again, we're going to be worried about, are we going to go back down to the April low at 970? The high of the year was 1075 and three quarters. We were there a couple times, once in February and once in June. In April, we went down to 971. So there's your risk range. So when people say, what's the risk? I'd say if the computers and the algos get a hold of this thing and decide to go push it down to old lows, we could go see 971 possibly. That's probably the worst case scenario. So yeah, if you're storing beans, keep a floor up on it. Right? If you're hoping basis gets better, great. Basis probably will get better the first of the year, but you don't want to be waiting for basis and then have the flat price drop on you. So keep a hedge on. And I sent out specific recommendations again yesterday to all clients. Take a look at those. Um, I'm not averse to selling calls here on stuff that you're going to store, but that's on a case by case basis, and we can talk about that. And again, I custom fit this program to people. I don't just say, okay, this is what you have to do, take it or leave it. And then finishing up with December wheat, down 3.5 cents. Traded as low as 492 and a quarter. My next level for D Suite would be 484. Uh, Kansas City traded 477 and a quarter. If we take up 475, that opens up the door to people talking about 450. So it can happen very, very quickly. Maintain your puts. If you don't have a put, get a put on the books. If you look at the long-term charts, there's still 40, 50, 60 cents worth of risk in wheat. Again, what am I basing that on? Well, if you go look at a very long-term chart, if the market starts doing what it likes to do, which is going back to old lows, um, it's a bit of a roadmap. It doesn't always work. I know the old story. I've been in this business for 30 years. I know the story that the sea is littered with the boats of captains who had charts. I understand that. But when you ask me what the risk is, given the fundamentals, and given what's going on in the world, and given the supply of wheat, that's your downside risk. Moving over to livestock, we will see new contract highs in fat cattle and feeder cattle yesterday. We had a little bit of a pullback higher in December hogs. I would maintain hog puts for people that are working with me. We have had a pretty good correction. We've given back about 25% of the rally that we had since April. Yesterday and today, for clients, I'm rolling down those puts that we had. I'm taking money off the table. In some cases, I'm taking back all the premium that we paid for our protection and maintaining a floor. So yeah, you're going to have a floor which was paid for with house money. Anytime we can do that, I always try and do it. At the end of the day, remember, you're a farmer, you're a speculator, you're a commodity trader. The only problem is you're always bet long. So for you, it's just like in the NFL or any high level football team, defense wins. Okay. So on that note, I'll let you guys have a good morning. We'll see what happens in the rest of the day. Take a look at diesel. I talked about diesel in the weekly wrap. It's trading at about 218. It's also lower here as crude oil is lower, down to $1.14 overnight, trading at 58. The old low I'm going to watch in crude oil is that 55.12 level, which is going to be a 4-year low if we go take it out. Lots of reasons behind that. At the end of the day, um, that's going to be a key level to watch, that $55 level in crude oil. This is Chris Robinson, 312-638-8868. If you don't have a hedge on, if you don't know what a hedge is, give me a call.